Hello, Warriors. This is Dale Pinkert here at TradeGateHub.com. We were talking about the potential of a false breakout if we rallied above the 93.52 level and then after a candle or two started fading back underneath it for a third drive to a top and a false breakout. Looks unlikely now, so I've taken my 30-point loss on this from my short. I got short just in case we didn't do this. You have to get long now, and you're wrong under 93.50. I thought we were going to have one more jiggle before we started heading towards my intermediate term targets, which are up here at the 96 level. So I'm not saying that we're not going to have corrections, but right now, especially if we finish like this, I have to call this a pretty impressive breakout over 93.50. Flat top, ascending triangle. If you just take the measured move from even down here, 92 to 3.5 is going to give you 95. So there's still plenty left. It's interesting that the euro is holding up quite well comparatively, where cable is really getting hammered hard. Look at that. So we have a red day, and the yen continues to accelerate to the upside, which is really putting pressure on stocks. I showed this break on the NASDAQ yesterday. We're not that far away from taking out the low of the move before we had the 61.8% 61.8% retrace that peaked on Monday night, although the old high is weeks away. So strong dollar, weak everything else, including the gold. Okay, so, I've been saying, still no reason to buy gold or silver yet. Gold's trying to reverse. Silver's acting okay. I really have to wait for 96. And also I talked about the yen going to this third drive level up here. I mean, the yen is really parabolic and it should find some trouble up here at 112.5. So there's another couple hundred pips left in this trade. So we have a big red day, and that's what happens when the dollar begins to accelerate. It deflates asset prices. So if we're going to 96 in the Dixie, there's still some deflation and some more pressure on markets due. So here we are. There are a lot of wave counts that take it up to 96. I thought we might get one more jiggle down to 91 first, but now I have to respect this breakout over 93.5. And I've learned, in fact, we're starting to even confirm on this time frame about the 2 hours, trying to confirm there's no divergence on this breakout. So dollar looking good. And when the dollar is good, hardly anything else is. One currency that really I'm surprised with risk off, that right here you have Aussie not making a new low, but let me use the new low as yet. Although it's holding up well, kind of reminds me of the expression, I always look for relative strength and relative weakness for my preferred longs and shorts, but there's an expression, and I'm sure it's true in the stock market today. Even the groups that were leading with higher yields, I bet, are getting caught up in this sell-off today, that you could own the best stock in a bad market and it doesn't matter. It may hold up better, but it's not going to go up. Okay, normally when you have this type of liquidation break, if we end up with a 3% down day in NASDAQ, I think that's really going to be a huge signal. There was a guy back in the 20s before the crash, his name was Babson, and he had a rule that if you get a 3% sell-off in the market, that was really a tip-off for a new bear market emerging, and then you sold the next rally. So we'll see where that next rally comes in. But, you take a look at this NASDAQ, and it's pretty weak. Remember, my bet was that we were going to take out this low. We we're going to test out my RSI theory. that markets rarely put in lows when momentum and confirms price, which is what happened here last Monday before we recovered. So we'll see if we diverge here or not on this next decline, taking out this low. VIX has been erratic, so erratic. Okay, so we had this big move Monday and it gave it all back, and it's happened quite a few times. If this was an EKG, it's definitely not in a coma, because you're getting erratic heartbeats, aren't you? You're getting, AFib here, and then the heart starts moving slower again. But anyway, you've had this going on for quite some time, where breakouts fail and then sell-offs hold. But it's not just this smooth grinding action. It's punctuated with big rallies. We went from 15 to 28 here. We did the same thing here. And I look at this and maybe we're going to get some type of third drive. Not a bad looking week, considering how negative last week ended up. If we could take out this 29 level, you would think that we could head into the 40s. Okay, so 1443 would be a measured move back over 29. You just tack on 14, it's going to give you 43. So VIX looking good. Volatility is back. Yields are under a lot of pressure. Take a look at the TLT heading back down to major support. So what else is interesting? There is no flight to quality. And this is interesting. What do you buy in an environment like this? Is the dollar crashing? No. Is gold a good hedge right now for a market sell-off? No. How about silver? No. Well, I guess you could say oil still holding up, but it sure is due for a correction. So if you can't run to bonds and you can't run to gold, let me bring up a word that everyone hates and will begin to love someday. Cash. Cash is the position too. So when you're sitting in cash, perhaps when this correction plays out over the next several months, you're going to have ammunition to buy assets that are repriced by a liquidation break, kind of a reset of prices that we haven't seen since the COVID crash. So looking at the NASDAQ on the 4-hour, you could have a measured move I was calling this like a low bear flag right here. And you could have a move like this from the breakdown. It's going to get you down to about 14,000. 1.618 of this would get you there. So to me, the next stopping point could be all the way back down here at 14,000, but I have some other important technical areas at 14.5 or so. This was the megaphone formation, the rising wedge, and this is the wedge line that goes all the way back to this low, 11,000. So that would be my target. And they both intersect right around here at the 14.5 level. So back under 14.5 really lights up the falling wedge, and the throwover is over. And we could probably head towards this blue line. Looks like a magnet. That's one of my, for this first wave, that's my objective. Maybe we'll be there by year end if I'm right. So that's around 11,000, between 11.5 and 10.5 there. Not much else to cover if you're not short. Dollar looking good. So it's okay to be wrong. It's not okay to stay wrong. So I knew it was going to be one way or the other. Either it was going to be a false breakout. If that was the case, I said yesterday, that would have bought some time for the S&Ps, because that would mean that conditions a weaker dollar is risk on, and that if we had a breakout, it was going to feed into risk off, and we're on our way. Yen's on its way. What a parabolic move that we have here in US dollar yen. And I'm going to be very curious. And I talked about this potential 3 drive. Let's see what happens. It might be a good time to cover short positions and everything if the yen tops up here and finds rejects, and there is some respect of this 3 drive line up here. Right now, you can't short the yen. You have confirmed highs. Look at these readings. Okay, markets rarely will top with an 85 reading. Here's a 2-hour, that's at 80. Okay, so the only time frame that might be diverging, and it's not yet, is a 15-minute. Okay, so just have to respect yen's strength. We just have to respect yen's strength during this time period, and be careful with what's happening here. You know, this was a great time to raise cash. Mike and I talked about it. Mike handles a big portfolio. He'll be with us tomorrow. Basically cleaning up here on shorts in the S&P, and what's happening here in gold. Gold bulls are going to have to be very careful if we take out this 1680 level, because it could measure to like 1500 gold or so. So we have a bit of a whiff of everyone's talking about inflation and higher prices, but it doesn't mean that asset prices can't come down while inflationary pressures through bottlenecks caused by the supply chain and just demand outstripping production of everything from semiconductors to metal to glass to everything. But certain commodity markets, especially the ones that China has tried to put a clamp on, and I talked about this yesterday, that I also think that the start of this credit crisis, and you know, maybe we're down today also because of some potentially self-inflicted wounds here in the US with the Senate blocking the lifting of the debt ceiling yesterday that the Democrats tried to pass. So now they have to go through a lot of different parliamentary type proceedings to do it. Everything's up for grabs in Washington. The Fed has said they're going to taper. So there are a lot of risks out there. You know, you have geo risk and economic risk with China. They're 1/3 of the global GDP. Now they're even having energy issues and shutting down production. So we've hit a patch where risk off might be, you know, what we're going to be seeing into, you know, I felt at least until the end of October, maybe November, maybe even into year end. So I think we have some issues here in the market. If you have money made on long-term positions, it's still not too late to hedge, especially if we have, you know, another 20% left in the market during this time frame. And if your reason for not selling is you don't want to pay a capital gains tax, I have some news for you. You might pay more next year. And then if the market melts, because I've seen this before, you would be glad to have positions on that you would owe taxes on. So I saw this in 2000. People had all kinds of money made while we were starting to melt in the bubble. And they'd come to me. I said, well, why don't you just lighten up a little bit and take something off the table? They go, oh, no, Dale, I'd have to pay too much in taxes. Well, they didn't have a tax bill on that. So major events, dollar breaking out, pressuring everything from gold to, you know, I bet even some of the other commodity markets might be under pressure. Yeah, so you have corn down after having a good day. You have wheat down. I still think these grains are going to be a great buy. Beans are really quiet. we're moving into harvest time, so I'm monitoring these. Take a look at the debt markets and see what's happening to them. Well, junk is finally taking it on the chin. So everything starts with credit before it turns into a recession or a bear market in stocks. So you made a new high in high yield as people chase higher yields. The higher the yield, the higher the risk. And here's corporate, okay, investment grade corporate breaking down under a 200-day moving average. Cannot be good for corporations having to roll over debt, which they use for financial engineering, for stock buybacks and dividends. And let's just take a look at some of the FANG stocks. Amazon's giving up the ghost today. Let's see what happens there. Microsoft, 2 big down days in a row, 5 lower, 5 lower. And Apple not down that much, trying to come back. So, you know, a lot of these different FANG stocks, Facebook trying to, you know, make a stand. Still doesn't look too good to me. Think we had a top there. And keep an eye on the US dollar yuan. And if we start to get the yuan breaking out to the upside, that's going to be another reason for risk on. Also, for you currency traders, one of the best risk on currencies, and I'm going to show you a little something. Let's see where I had it. Here we go, US dollar max. All right, so doesn't that look like the VIX? Huh? And it's coming out of here, and this is a risk on. It's a weaker peso. So, you know, the longer the base, ever hear this expression? The longer the base, the bigger the launch into space. So this is a pretty good base at higher lows here. So this was the financial crisis, and the market made new highs, but the peso didn't make new lows, right? And the VIX has been making higher lows. And look at what we're coming out of here in the peso. So this too is a good hedge for risk off. In case you didn't know it, you know it now. So good hunting. It's our mission to build up and edify traders every day. That's our mission. I welcome you to come to our platform. I posted some ideas. Michael posted ideas all morning. Community starting to grow. Other people are starting to bring their charts to our mastermind and invite you to join us. And above all, don't just count your pips, count your blessings. And we'll see you tomorrow. Hopefully I'll have Mike with me and we could talk about what is unfolded today. Adios.